How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing an overall market update, taking a look at the Dow Jones, the S&P 500, and the Nasdaq. We're also going to be doing a trading update, talking about what I personally did today in the stock market. And as you all read in the title, I also want to go over a bunch of stocks and ETFs that I'm watching and looking to trade right now, as the stock market is very volatile, as we're experiencing a sell-off in the entire stock market, and honestly, we may see a further sell-off here, opening up even more opportunities in these individual stocks that I want to share with you all. And quite honestly, I just want to let you in on my mindset, my mentality, and just a bunch of thoughts going through my head right now. So if you guys enjoyed this video, simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further content like this. And if you want to be further connected with the Strive Smart community here, there's a Discord group chat down below in the description box, as well as a Facebook group. Feel free to join those. They are 100% free of charge, and I guarantee you guys will find a bunch of value in there. So let's just get right into it. Let's talk about quickly what the overall markets did today, starting off here with the S&P 500. And at the time that I'm recording this video right now, with about 1 hour left in today's session, the S&P is down only $10. Wow, down only $10, down 0.25%. And you guys know that compared to the previous 2 days of trading, this is amazing. This is a great day, because 2 days ago, we had a 100-point loss in the S&P. Yesterday, we were also down 100 points in the S&P. So the fact that we're only down 7 points here heading into Power Hour right now, that is a really good sign. That's a really good sign. Down only 0.25%. And if we're just breaking down some basic support levels here, just taking a look, let's say, from these two previous trading sessions, we're generally holding right now 31.20. You guys can see yesterday we held that at about 2:30 p.m. Eastern Standard. We actually held it again with about 20 minutes left in the market yesterday. So that was, I guess you can say, maybe even a triple bottom here, right? We triple bottomed here yesterday. We popped out. We were green for a lot of the day today, but now with the sell-off that we're seeing, I guess the only positive sign is that, again, we're holding 31.20 as of right now. And again, with this hour left in trading, in Power Hour, anything could really happen, right? If we dump down here, that would be very bearish, right? That could lead to more selling here in the overall markets. But if we end up doing something like this heading into these next 45 minutes to an hour, that would be a very good sign from a bullish perspective here. And in my opinion, that would mean that the bulls won at least today's trading session if it were to pop up that way. But vice versa, again, the bears would be winning today's trading session if it were to do a dump off and completely just break below 31.20, right? So that's kind of on a more intraday scale. That's a level that I'm watching right now and heading into the session tomorrow. And overall, you guys know that I see a healthy range for the S&P being right now at around $3,000 to maybe $3,025. That would be putting us on top of an old all-time high as a new support, as well as that 50 simple moving average here on the 3-year 1-week chart. And from top to bottom, and by top to bottom, I mean, let's say, from 3,400, roughly that all-time high, to down to 33,000, 30, where it could be the bottom. That would be a nice 10% sell-off, which is extremely healthy in any market, guys. If we're seeing a 5 to 10% sell-off, especially when the market's been hitting all-time high after all-time high after all-time high, that's a good sign, guys. It's not really worth panicking, in my opinion. I'd say say anything above 20-25% sell-off, that's worth panicking, in my personal opinion. Will I panic? No, but the general population will most likely panic at 20-25% of a sell-off, and that's actually what constitutes a bear market. But at 5-10%, don't freak out, guys. Don't freak out. This is just normal market fluctuation. So going over here to the Dow Jones, we're actually right near a very strong support on the Dow Jones. Today, we're down $82, $85 at the time that I'm recording this video, down 0.3%, and this is a very good day compared to what the previous 2 days were, which were pretty much double back 1,000 or back to back rather 1,000-point red days for the Dow Jones. And like I said, very strong support here. This is where we triple topped a couple months ago, really over the past year to 2 years at this point. We triple topped at around 26,600 once here, twice here, 3 times here. Then we ended up breaking out of that level, surging to almost 30K, 29.5K to be exact. And that really made that triple top resistance a new support. So the fact that we're trading near it, as well as that 50 SMA here on the weekly chart, this is definitely a spot to watch and consider the Dow Jones holding here in the short term. And if we were to break that level, guys, that wouldn't be too pretty in my opinion. The lowest I can see this thing going, not maybe the lowest, but one of the worst case scenarios, let's put it that way, $24,300. That's around another 2,300 points below from where we are now. I could definitely see the Dow Jones worst case scenario getting there, and that would be putting us at a very healthy spot right on top of that 180 SMA here on the 3-year, 1-week chart. Now, going over to the Nasdaq, believe it or not, guys, this thing is green right now. It's up 0.25%, up about 20 points right now, and this is mostly because, really solely because, tech stocks are doing quite well today. They're rebounding quite nicely. We have Netflix up $17 per share. That's a pretty nice rebound there, up almost $5 per share or 5% right now on the day. Microsoft up 0.9% today. Google's up 0.4%, up $5 per share. Facebook's up a nice 50 cents. And let's take a look at what Apple's up right now. Apple is up $3, while Amazon is also up $5. So the big tech giants out there, at least today when I'm recording this video, they're actually green, which is why, again, the Nasdaq is doing better than the Dow Jones and the S&P right now. And if we're just judging the Nasdaq on a technical basis here, we can see that the next main support we're dealing with, which it seems like we held it today, is going to be around $8,700, $8,750, $8,700. And this is a level that we illustrated in yesterday's session. And you guys can see we did end up holding it earlier. Was this earlier today? This morning, actually, 3 hours before the market opened. The futures held that $8,700 level. So that's a good sign. But either way, the Nasdaq, if we're taking a look at this hourly chart, it's still downtrending, guys, right? The S&P on the hourly chart is still downtrending, and the Dow Jones is still downtrending, leading me to believe there could be some more downside here in the market, which is why, quite honestly, I'm still heavy cash. Day trading TVIX every single day, and I'll show you guys what I did here in a couple of minutes. And this is kind of how I'm making money and hedging against the market going down, trading in and out of these ETFs that go up when the markets are selling off. That makes me make money here, and being more cash heavy and really hedging against the market dropping by being cash heavy and just waiting for those opportunities that we're going to talk about here in about 3 to 5 minutes. And I have a lot of opportunities here opening up, guys, as many of you all have probably seen for yourselves. And one more announcement regarding the CV, which has kind of obviously been dragging down this market, the whole global impact of the CV. This is what's been scaring the market, pushing a lot of fear into it. President Donald Trump is actually speaking about this 6 p.m. Eastern Standard. So when you're watching this video, he already spoke. And honestly, guys, this is another reason why I'm in cash heavy right now, because who knows what he's going to say at this meeting tonight, and who knows how this is going to fluctuate the market. So for me, I'm being safe. More cash, just in case something crazy happens tonight and the markets fly in either direction tomorrow. So having the cash helps me at least go into tomorrow's session feeling a bit safer. So let me know down below in the comments, what are your thoughts on the markets? Now let's just jump right into what I personally did today. So yesterday you saw that I bought some NVIDIA, ticker symbol NVDA. I ended up dumping those shares earlier this morning just to play it safe. Really just to play it safe against the downside in this market. I know I bought this thinking of holding it as a swing trade, but this morning my senses kind of kicked in and I was just like, I need to just sell out of this. I'm already in Microsoft pretty heavy. What's the point of starting a fresh new swing position right now when the markets still have potential to fall, right? Again, heavy Microsoft. There's no really need to build NVIDIA right now. So I just took a quick little profit on the little position that I built out. And if you guys, again, saw my video yesterday, you know that I got in around $263 per share. I believe I got in during this consolidation period right here. And it honestly made for a nice overnight swing because you can see we actually popped all the way to around $275 per share. That's not where I sold it, but if I were to sell it there, that would have been a nice $12 per share gain from where I got in, which would have been 4%. But where I sold it was $268 or maybe $269 per share, which still is great. That was a gain of around 2.5%, which is awesome. But again, I didn't get that full 4%, which, guys, you're not going to get the maximum profit on every single trade. The idea is to get some of it, lock it in, and then move on to the next one. And that's kind of what I did here with NVIDIA. And then what I traded after that was, or not after that, maybe, yeah, I guess it was after that. I ended up buying some TVIX this go around, and I lost money. Ended up spooking out of it. As the markets, if you paid attention this morning, the markets, they were crushing it early on. The S&P was up like $50, $45 at one point, and I was buying TVIX as the market was peaking up here, and I bought it a little bit too early, so I took a little loss on that position. But get this, guys, I got back into TVIX later on in the day at about, what was it, like 70, I think it was $73.50 per share, something like that. I put in not a crazy amount of money, but an amount of money that I was cool day trading with, right? And I ended up selling out at $78.50. That's where my limit order hit, and this is one of those trades that I timed perfectly. I got in on this bull flag here, I believe it was very, if you read this, you would have saw it, you know, bull flag, boom, ended up getting in again around 73.20 or something like that. Ran this all the way up. 78.50 is where I sold. This was a textbook breakout play, and it was really the biggest winner for me of today's session. So overall, guys, that is what I did today. Let me know down below in the comments, what are your thoughts on those individual trades? Did you trade TVIX? Did you trade NVIDIA? Are you buying anything right now? Are you selling? Let me know down below in the comments. Now, let's talk about the top stocks that I'm looking to trade right now during this volatility, and just ones in general that I'm keeping my eyes on. So let's get into the top stocks and ETFs that I'm watching right now. And quick disclaimer, this is not necessarily, or rather these stocks, ETFs, they're not necessarily screaming buys right now, at least in my opinion. But what I think is, if the markets continue getting rocked, if the markets continue dropping, these stocks could end up opening up fantastic opportunities down the line. And the first one here, guys, is NVIDIA, ticker symbol NVDA. And again, I sold out of this one today to mitigate my risk against further downside, and I feel comfortable with that. And that, again, that doesn't mean that I'm not looking to get back into it. Quite frankly, I think NVIDIA, if the market continues selling off, which it could very well happen, I think NVIDIA anywhere in the 220 to 230 range, heck, even the 250 range, this could be a fantastic opportunity to pick up some shares in this company that, quite frankly, this is not an NVIDIA video, but it's been a great company. They've been crushing earnings. Management's been executing. They've been growing very nicely. I'd love any single dip or any drastic dip in this stock. I'd consider it, right? Another one, kind of like NVIDIA, that's been doing very well, that rarely ever dips a lot like this, is MasterCard, ticker symbol MA. This is a company that, honestly, I was looking to buy a couple months ago at around $280 per share. Completely missed that rally from $280 to $340. Now we're getting back to that $280 level, $280 to $300 level, right? And this is an area where I'd love to pick up some MasterCard, because again, this is like NVIDIA, very well managed. They've been growing a lot, and it's a company that rarely does take dips like this. And when they do take dips like this, it's wise, at least in my opinion, to consider buying into it. And please, guys, don't buy into any of these. Don't sell any of these because I'm talking about them. You have to do your own research in the stock market. As always, do not take anybody's advice out there on YouTube. You got to, guys. That's how you become a self-sufficient trader, right? So, an investor at that matter. So, MasterCard, I'm loving it, right? $47 per share was cut. 14%, guys, 15% drop. This is definitely worth considering, and I will for sure be watching it if the markets get rocked even further. Microsoft, another one of those companies that it rarely sees big dips like this, which is why I've been buying into the stock over the past 7 to 10 trading days, ever since it did take a bit of a dip from $190 per share. So Microsoft, for sure watching it, ticker symbol MSFT. Apple is another one of those companies that has not really taken many dips over these past couple of months. The stock's gone from 187 to 328. Now we're getting a lot of pressure from the CV. Obviously, it's affecting many companies. Apple came out saying their Q1 numbers are not going to be what they were. And honestly, many companies out there, their numbers for Q1, they're not going to be good. And that's kind of why a lot of these companies are seeing a sell-off, Apple included. So for me, am I looking to jump into Apple here? Probably not. But if we were to sell off into, let's say, the 230s, 240s, 250s, I would for sure consider picking up some Apple at those prices. But if I were forced to buy something right now out of the four that we've talked about so far, well, it would definitely be Microsoft or MasterCard. And obviously, I'm already in Microsoft, so of course it would be Microsoft, because I already bought some, but if I were to buy another one now, it would most likely be MasterCard, right? Ticker symbol MA. Disney was in the news yesterday because Bob Iger, their CEO, has stepped down. He stepped down. He's going to be a part of the executive board for one more year up until the end of 2021. But I watched an interview with him and his successor, whose name is also Bob, the new CEO. His name's going to be Bob as well. They had an interview talking about how this process of the transition, it's going to be very, very smooth, right? Which is why I'm not worried about this CEO change, quite honestly. And I've gotten messages on Discord today and Instagram about it. And the truth is, this new CEO, his name is Bob. Again, I'm forgetting his last name right now for some reason, but this CEO, the new CEO, he's been working under Bob Iger here for 15 years, guys, since Bob Iger has been the CEO of Disney. And this is the best case scenario, in my opinion. Having someone that's already been around step up to CEO, and since Iger is going to be on the executive board for another year and a half, as this new CEO is being CEO, he'll still have Bob Iger to give him pointers, to help him out as being the new CEO. So I feel like the transition process is going to be very smooth, which is why, honestly, guys, if I'm being quite honest, I bought more shares of Disney today in my long-term accounts because I think the company will be fine. And it wasn't a crazy amount. It was actually in my M1 Finance account. I bought like a half a share. I just averaged in using fractional shares. And I honestly will continue doing this with Disney, especially if it gets down into the 110s, which is a real possibility, especially if the CV gets spread in the United States and they have their parks here in the United States, God forbid, get closed or really get shut down for a more extended period of time. I think that is what the real danger is for Disney right now, is really those parks here in the U.S., to be honest, guys, because Shanghai, I believe, is still closed. Their one over in Paris is still closed, so definitely keep an eye out for that in terms of Disney. So the next one I want to talk about here is Virgin Galactic, ticker symbol SPCE. And this stock, no pun intended, guys, is finally coming back to earth. Today, it's down $5.11, down 15% in today's trading session. And honestly, guys, although I didn't dive too deep into their earnings quite yet, I would attribute this drop to their earnings. They actually reported fourth quarter revenue of, get this, $529,000, with a cost of revenue being around, or actually their total operating losses being around $72.7 million. So they brought in $500K revenue in Q4 and they lost around $72 million because, being a space company, a lot of money goes into research and development, guys. A lot of money goes into that. And this goes to show this company's worth what? $3, $4, $5 billion. This goes to show if you're buying this company right now, if you're buying the stock, you're buying a company that's worth a lot of money and it's not really making any money quite yet. So there's kind of a leap of faith, of course, with any spec stock, but especially with space here. You're taking a leap of faith that they are eventually going to grow into that revenue. They are in the future, whether it's a couple years from now, 5-10 years from now, they are going to be doing space tourism, making a lot of money from that, point-to-point travel. They might be doing that. These are the leaps of faiths, the leaps of faith, that's what it is, that you're taking right now investing in space. And to me, guys, there's no way I'm taking that leap of faith quite yet. Let's say if it were to get down maybe to not even $20, guys, there's really no price that could justify this valuation. It's just insane in my opinion. 500,000 in revenue, but they're worth $6 billion, $5 billion. That's pretty crazy. In my opinion, at the point of the economic cycle we're at now, the bull run, it very well could be over. I rather put my money in a safer stock, not recommending these, but let's say, or recommending them for you, but let's say like Johnson & Johnson, maybe an ETF like SPHD, which is low volatility, maybe something like Procter & Gamble, Coca-Cola. I'd rather have my money there for right now than buying a kind of a leap of faith investment like SPCE, but that's just me, guys. Let me know down below in the comments, what are your thoughts on that? This company could very well grow into that valuation in the next couple of years. Who knows? We only have time to wait for, and time will tell what ends up happening. So another one that's reporting earnings today is Square, ticker symbol SQ. This is one that I'm for sure keeping an eye on for, as I'm bullish in general in many fintech companies, financial technology companies, Square being one of them, PayPal being another, MasterCard, although it's not the exact same business model as Square and PayPal, MasterCard's still in that fintech space in a way, right? They're still innovating for the future and adapting to what the future is going to be. So in general, I'm bullish in this space. SQ for sure one worth watching. The next one here I'm watching is Google, ticker symbol GOOG, and this one is actually at this point in time down about 10% from its all-time high at around 1532. And whenever one of these big tech names fall 10-15% from their high, I'm not looking to jump in right away and buy, but I think it's always worth watching them. It's always worth watching them, as they could open up a better value if the markets bring them down even further. So Google's one. Facebook's another tech name that I'm watching here in the 190s. This one's down, I think, more than 10% from its peak, down about 12-13%. So for sure I'm watching Facebook. Tesla is one that, is it coming back down to earth like space? Not in the same fashion, but it's slowly seeing this little pull down, affect it. Rather, the volatility, the pressure from the market affect the stock, and we're seeing it trade back to around $700, in the $700 range. And if you guys watched my video yesterday, I mentioned how this level here on Tesla, let's see, at around 750, 760, this is one of the main levels of support that's coming up. And the fact that we are looking like we'll close above this level, that is a good sign in my opinion for Tesla, although the downtrend in the short term is still intact. So until we break this, I'm not really looking to get into Tesla, ticker symbol TSLA. And the last two here are going to be Uber and NIO, guys. Uber has been getting slaughtered, I feel like, harder than many of these stocks. This one's down 4.1% today, and from its peak at about 41.50, this thing's down almost 17%. So for Uber, one of the main levels I'm watching now is going to be around 33 to around 34 bucks. That's the next level of support. And NIO is this next one that I'm watching, which we got some great news of funding yesterday, but today, guys, it's down about 1.6%, down 0.07, or rather down 7 cents. So for me, I think the tradable range in NIO, and I've been saying this in many of my videos, is from $4.50 to $5. So until we get a healthy move above $4.50, I'm not really looking to get into NIO here in my swing account. I'm long NIO in my long-term account, but I'm not selling that anytime soon. But for my swing account, I'm looking to get in again at around $4.50. So overall, guys, that is today's video. I hope you all enjoyed it and found value in it. Let me know down below in the comments, what are your thoughts on these stocks? Are you watching similar stocks? Are you watching any ETFs that you want to share with me? I'd love to know down below in the comments section. And also, if you guys enjoyed the video, hit that like button and consider subscribing if you want to see further content like this. And don't forget to join our Strive Smart Discord group chat and our Facebook group 100% free of charge. And if you guys want some more free stuff, well, in this case, money, free money, you can get 2 free stocks down below in the description box from Webull, and those are valued up to $1,400 with a deposit of $100 into the account. And that is an affiliate link. I do get a kickback from you signing up using that link, but it does help me out for putting out all this free content on YouTube for you. So I would appreciate it if you did help your boy out. So that's linked down below in the description box. I'll catch you all in the next video. Thanks for the support. As always, peace out.